Brett Wander, have we seen the last of sub 2% 10-year Treasury yields?
Unlikely that Treasury rates are going to go much below 2. They might touch 2. They might go a little bit below 2. Unlikely that they're going to go too far below 2. The economy is starting to show signs of improvement. Investors are starting to get a little more comfortable with risk. I think 2 would represent a reasonable floor.
That's the national economy. What about the individual state economies? Let's talk about munis for a second.
Yep.
Munis had a great run up in 2011.
Yep.
They sold off a little bit at the beginning of 2012. What's your outlook for the rest of the year?
I think the muni market is generally going to be somewhat stable. There's no particular risks that we are specifically concerned with. However, from time to time, there'll be surprises in the muni market. Any individual municipality can come under stress. I think the most important thing for muni investors is to maintain a great deal of diversification.
Well, a lot of municipalities just don't have the money when you look at Stockton, California, Jefferson County, Alabama.
Correct.
However, corporations do have money, at least
Yes.
that's what we keep hearing.
Yes.
So are corporate bonds still a good place to be?
I think corporate bonds are a good place to be. You're right, corporates have more cash than ever. Their credit paying ability is very strong. Even if the economy continues on a rather sluggish pace, corporates represent a good opportunity in so much as their yields are on the order of about twice that of Treasuries.
All right, well, if you really want yields, you can go to high yield. Is that the only place where you can get high yield now, unless you want to buy Greek or Italian bonds?
Well, certainly there's a lot of governments who are trading like high yield bonds. I don't think I'd advise investors to pursue yield for yield's sake. The biggest thing to remember about high yield securities is that they're very much correlated with the equity markets. So while you might think you're getting diversification by going into what might be technically a bond, the price of those securities moves a lot with equity, so it's something to be very concerned with.
People worried about inflation have been streaming into gold.
Yep.
What about tips? People forget about tips. Do you want to own tips?
Well, tips represent protection in the event of unexpected inflation, so they've got a good hedging property associated with them. At the moment, though, they're trading a little bit rich. I don't know that I'd overweight tips per se. Inflation has to reach a certain level that's a little bit higher than what most people are expecting. So tips might be a good diversifier in a portfolio. I wouldn't be an aggressive owner of tips in the current market.
Finally, what about agencies? People say that the housing market is recovering. What does this mean for agency bonds?
Well, there's 2 kinds of agency bonds specifically. There's straight agency debt with trades with a very small spread premium over Treasuries. Generally speaking, very safe, highly liquid. There's agency mortgages. That's a different story. Those are subject to a different kind of interest rate risk, which means that investors who are looking for a very predictable set of cash flows might be concerned about that.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to